what's really driving some of these deals is not necessarily having new products for the sake of filling in your pipeline, but it's also what I call the kind of management arbitrage. Now, what does it mean? People are talking about Bill Ackman, but the real person who's actually instigating some of these deals and transforming this landscape is Mike Pearson, the CEO of Valiant. I mean, this man has bought 38 companies since 2008. What he's done is he's identified companies that has high margin products. He's integrated them, cut costs, and what he's done is gone to the next deal. So which means we're going to see companies that are specialty pharmaceuticals, companies that have orphan drug status on some areas like ophthalmology, dermatology, even dentistry. These are the companies that will be targets going forward. What also we have to take into account is today's three-way deal between Eli Lilly, Novartis, and Glaxo, which also tells you that the big pharmaceutical companies would not necessarily go hostile.
There's just not enough growth out there in terms of the Western world to support current valuations longer term. The Fed is clearly looking to end QE as soon as it practically can, fourth quarter this year. And at the moment, we've just heard from your own guys about QE in Japan. Is the whole Abenomics working?
Yeah.
And the ECB seem to be pretty reticent about pulling the trigger there. So without a new injection of liquidity, it seems pretty difficult to see how the markets can continue to race ahead like they did last year. So we remain more sort of range bound at the top of the range than anything else. So the risks in terms of a policy error from the Fed or the ECB, an escalation on the geopolitical front, which is maybe more a worry between Japan and China than maybe Ukraine. But none of these risks, to us, appear to be factored into the market. So without those risks really coming to bear, markets maybe just grind sideways to slightly higher. But with the risk is that with liquidity becoming less and less, or liquidity injections becoming less and less, the markets will struggle to move much higher. So it's a very finely...
Look, I do think markets are getting more comfortable with where the PMI currently sits. And I think there's a view, and certainly our view, developing more and more, that authorities in China will certainly defend a 7% GDP growth number. So if we were to see growth slide towards that number, we're expecting to see some mini stimulus packages come out certainly in the second and third quarters of this year. Yeah, well, we've already seen early stages of that. I think we saw changes in the reserve ratio for agricultural banks, and obviously the targeting where lending can go as against broad-based lending, and in particular trying to obviously cut back that shadow banking situation. It may well be that those numbers last week we saw on Beijing property prices is starting to see some effect from that targeting of shadow banking. So I think it's those sorts of packages that are likely to see to come out more and more as part and parcel of their overall structural reform, supporting certain industries or certain sectors within the economy, but not broad-based stimulation.